Wow. Well, you are not going to believe this, folks. April 9th, 2025, and well, the U.S. stock market, I mean, it just exploded.
Yeah,
The Dow shot up by almost 3,000 points.
it's a big one.
So for anyone out there, trying to sort out their money in this crazy, kind of roller coaster market, I mean, that's got to be huge news.
It absolutely is. And, I think what's really interesting here is what seems to have triggered this huge surge was a pretty significant shift in tariff policy.
Yeah.
Most countries saw a pause on tariffs, but China's tariffs were hiked dramatically all the way to 125%.
Oh, wow.
So it all seems a little paradoxical, right? That
Mhm.
a move like this with the potential for, increased global trade tensions would actually end up fueling such a strong market rally.
Right. It's kind of a head scratcher. Like
Yeah.
what's going on here?
Yep.
So to try and make sense of this, sudden jolt and maybe get a little perspective on how to navigate times like these when things are so unpredictable, we're going to do a deep dive into a classic, Rich Dad, Poor Dad by Robert Kiyosaki.
That's the one.
Kiyosaki himself still really champions this book. And so we thought, it might actually have some pretty relevant insights for you right now, given this surprising market jump, but also, kind of alongside these lingering economic uncertainties globally.
Absolutely.
So our goal is to really pull out some of those, key actionable ideas from Kiyosaki that might be useful, as you process all this news and try to figure out what it means for you.
Let's do it.
What?
Yeah, so maybe a good place to start would be, like right into a core concept from Rich Dad, Poor Dad, and that is this distinction between liabilities and assets. And Kiyosaki, contrasts his poor dad, his biological father, with his rich dad, who was a mentor figure for him. And the idea being that his poor dad really focused on acquiring things that cost him money,
Yeah.
liabilities, whereas his rich dad emphasized buying assets, things that would actually generate income.
Right.
And the book really stresses the importance of building that income-producing asset column.
Yeah, and that feels particularly relevant today, doesn't it? I mean, even with this massive jump, nearly 8% in the Dow and the Nasdaq soaring over 12%, if you kind of zoom out and look at the bigger picture globally, it's still pretty mixed.
Yeah, for sure.
European markets actually saw declines and oil prices are down, so it sort of highlights this idea that while the U.S. had this incredible day, the broader economic waters still feel a little bit choppy.
Precisely. Yeah. And if we can kind of connect this back to Kiyosaki's teachings, right?
Yeah.
I think his emphasis on acquiring those income-generating assets,
Yeah.
whether it's rental properties or businesses,
Mm.
that's something that he talks about in the book. And it could be a really solid strategy to consider beyond just reacting to these, stock market swings, right?
Yeah.
Because the idea is to actually build a foundation that can provide a little bit more stability regardless of what's happening in the short term, driven by events like these tariff adjustments.
Now, about those tariffs, that huge increase on China, I mean, that still feels like it could cause ripples down the line, doesn't it?
Yeah, it's possible.
I mean, we did see some, significant stock recoveries like Apple reportedly bouncing back 10% after a really big drop, and that definitely contributed to this rally.
Yeah, for sure.
But I mean, it's interesting to consider that while the U.S. market reacted so positively, those underlying global economic concerns, they haven't really vanished, have they?
Right, they're still there.
There are reports that are still suggesting a pretty considerable risk of recession globally.
Yeah,
So it kind of raises this question. Is this rally, a sustainable upward trend, or is it more of a temporary reaction?
that's the big question, isn't it?
Yeah, and this is where Kiyosaki often talks about the importance of diversification, isn't it?
Right.
Considering assets beyond just traditional stocks, things like gold, which I think has reportedly seen a little bit of an uptick recently.
Yes, yeah.
And he frames it as a way to, hedge against some of that market uncertainty.
Exactly.
Yeah.
Yeah, so, as you're taking this all in, as you're reading these headlines and, listening to these reports, I think a good question to ask yourself is, given this unexpected market surge and these persistent global economic worries, what part of Kiyosaki's advice really resonates with you?
Right.
Does this news make you think more about, trying to capitalize on potential gains in the market, or does it reinforce the importance of building that diverse portfolio of income-generating assets to kind of create a buffer against potential downturns?
Yeah, it's worth remembering, too, that Robert Kiyosaki consistently recommends Rich Dad, Poor Dad for these fundamental financial principles. And it really underscores his long-term perspective on building financial strength, regardless of what the current economic climate is.
Right.
And I think we're seeing that play out online, right? You've got some discussions that are full of people who are, saying this is a buying opportunity.
Yeah.
Got to get in now.
Nailed it.
But then others are much more cautious.
Right. Yeah, you've got both sides.
Yeah.
And I think that really underscores the value of what Kiyosaki is talking about, this focus on financial education. Right? It's about giving yourself that framework to analyze these surprising events, to really understand the potential risks and opportunities from different angles, and then ultimately make more informed decisions for yourself.
Yeah.
Rather than just following the herd.
Absolutely. And, thinking back to some of our previous deep dives, like when we talked about those broader economic indicators, that was episode 45. And then, various wealth building strategies in episode 41. This kind of sudden tariff policy shift and the way the market reacted. I mean, it really just highlights how interconnected everything is.
For sure.
And I think what Rich Dad Poor Dad offers is a really useful set of tools and like a mindset for trying to navigate the financial implications of this global trade landscape that is, constantly evolving.
It is, yeah. And it's worth noting, too, that the global stock market had seen, pretty significant losses prior to this rally. So it really kind of puts today's jump into that broader context of ongoing volatility.
It does.
Yeah, so I think, in essence, right, we've witnessed a really significant upswing in the U.S. stock market, seemingly triggered by this change in tariff policy, but all within this larger context of global economic uncertainty.
Right.
And Rich Dad Poor Dad offers a perspective, emphasizing that asset acquisition and that continuous financial learning. And, those are things that you can use to interpret these events and inform your own financial thinking.
Absolutely. And with that in mind, here's something to really kind of chew on.
Yeah.
Considering this really rapid and unexpected market shift, and those core principles we've been talking about from Rich Dad, Poor Dad, what's one specific area of your own financial learning or planning that this deep dive might prompt you to explore further?
Good question.
Yeah.
Yeah, food for thought.
All right, that's it for today. I'll see you next time.
Take care.
Bye.